Hello everyone, so today we're going to be looking at a really interesting indicator, quite a funny one, called moon phases. Now, from my understanding, it tracks the phases of the moon, and somehow maybe this might affect the markets. No idea, but it's quite interesting. It's definitely worth me checking out. So we're going to head over to TradingView right now, and we're going to get this indicator. So it's called moon phases. There it is. And just to have a quick rundown and understand exactly what it's doing. The moon phases indicator displays moon phases on the chart. A dark circle indicates a new moon, a bright circle a full moon. Bars between new and full moons are colored accordingly as waxing or warning. I don't know, I've never heard of that term, but okay. So basically a new moon and a full moon it tracks. So let's pop that onto the chart. Let's have a look. Let's get some of the inputs. Right, so waxing will be blue, a wanning will be, I'll make it black, and the styles, so a new moon we will make a diamond, and a full moon a circle. Seems pretty fitting. Alright, cool. So now we're going to figure out some rules. So before we do it, we're going to figure out some rules. So what I'm going to do, I feel that a new moon or a full moon kind of disrupts things, right? Like in kind of historically, you know, people go mental on a new moon or whatever, or a full moon. Werewolves appear on a full moon. So I feel like the full moon is going to reverse whatever movement we've had in the last few hours. Okay, so that's what I'm going to go for. So the first rule, okay, we're going to build a trading strategy based on this. So rule number one will be reverse current short-term trend. Okay, this is going to be like an intraday strategy. So that's number one. Number two, we're going to do whatever the length of the current leg is going to be our TP. So TP will be current leg length, and stop loss will be half of TP. Really simple. So those are the rules. Okay, really simple strategy. I don't think it's going to really, we'll see if it goes, you know, it's probably going to be 50-50, I can imagine. But no, actually, no, it'll be worse than 50-50 success rate, because we still have a stop loss of half. But all right, let's, all right, so there's the first signal. So we've been pushing up, so I'm going to go short position here, and now we've got to figure out where the leg really starts. And I would say the main leg kind of started there, you know, that's the main sort of push up. We've had little dips, depends how you want to view it, but I'm going to go for that one. So we're going to measure that leg up until to where we were. That's 500 points. So 500 points is our TP right there, and our stop loss will be 250. So I can already see that is a winning trade right there. Boom. Not bad at all. Not bad at all. Okay, so 1-to-1. Oh. Well, that's a hell of a good trade. Okay, so obviously the leg started at the bottom here, moved up. So we're going to measure that again. That was 899 points. Let's say 900 points. And, you know, it started there. 900 points down. So about there. And obviously our stop loss would be 450. No need to even put that stop, because, man, we smashed that TP. 2 out of 2 so far. Okay, third one. We had a little push up, kind of a leg there. So we're going to reverse it again. We're going to go short again. Right at the tip. Oh, no, that's a long. Sorry, my bad. We're going to short it right at the tip there. And our leg was 583 points. So 583, say 580. That means we have 290 as a stop loss. So again, 3 out of 3. What the hell is actually happening? This can't be real. This is the most profitable trading strategy ever. But okay, we'll keep going. Surely one is gonna. Nah, you're taking the piss. Okay, this would have failed. I can see. Here's the leg. All right, but close enough. All right, so this one, again, we would have shorted. Now it depends how you view it, right? It really depends how you view it. I mean, depends where you measure the leg from. Because if you measure the leg from obviously the bottom here, yeah, this is going to be a stop out, no doubt, right? But if we measure the leg from here, all right, we're going to have to set more strict rules of what constitutes as a leg. But okay, for this point, I feel like I've been taking the bigger leg. So here, this leg has been 900 points again. So obviously 900 would be all the way down here, and 450 would be our stop, and we would have got stopped out. Boom. All right, so we lost one trade. No big deal. Let's go to the next one. Again, this is insane, man. I can already see this is a winning trade. All right, we would have entered here. The leg, I would say, starts there. That is a 580 point leg, so 490 stop loss. 490 stop loss. Sorry, no, 490. What am I talking about? A 500, that's 290 stop loss. My bad. 290 stop loss. I can't even do math in my head. And it was a 580. Was it 580? Roughly 550. 550. Okay, so 550 stop loss. I mean, take profit. And so a 275 stop loss. Either way, I can see it's fine. That would have been quite a hell of a good trade again. Let's keep going. Okay, so this one might get just about stopped out. Again, it's a short position. Short position here. Our TP would be 606. 606. Oh, no, it's not going to do it. No, that would have been, that's annoying. And obviously our stop loss would be 300 points. Ah, so close. It got quite close, not bad to be fair. But let's keep going. Okay, this would have definitely failed. The leg, I mean, I could already see that's a failure. The leg would have been, it depends where you want to measure it, but if you want to measure it from the bottom to here, unless you want to, technically, actually, 1 second. I would consider that a little bit of a leg. We broke structure. No, this would be a long position. I would say this is a long position, to be honest, because the leg, I would say, starts from there and there. So we've got a 400 point win, and that looks like it would have done quite nicely. Here, that's the leg, clear as day. That's a short position right there. The leg started there to there, so 575. 575. Oh, this would have been, oh, wait a minute. 575. Oh my god. Oh no, are you kidding me? Nah. I'm sorry, 1 minute. 575. Okay, the stop loss would be, obviously, would be the stop. So the stop will be fine. But, oh my god, 570. I don't know how you... Honestly, I don't know whether to count that as a win or a loss. Let me... Okay, we're going to have to do exact measurement here. I feel like the measurement was maybe... Because it literally comes down to a point. So the measurement starts there, ends there. It's 572. 572 is actually... Oh, damn! To the tick! No way! To the tick. Holy crap. Okay. Ooh, that's insane. Okay, well there you go. We'll do another 2 more and then we'll see what happens. Another 2 more. This one I can see you got stopped out on right away. So you would have started there. The leg is here to here, and it's 437. So 437 is your target. Obviously, not going to happen. We'll call it 430, and 215 will be your stop, like so. And you would have stopped out, and we'll do one more. Again, similar thing. We would have got stopped out here. The leg is 285. We'll call it 280. And 140 would be your stop. You know, stopped out almost immediately. There we go. All right. We're going to leave it there, but now we're going to actually tot up the win rate and figure out how profitable that strategy has been. So you would have gained 2,400 points on the NQ. Extremely, actually quite a profitable strategy. Out of, you know, since, okay, all the way back from July, 405 points in the plus you would have made since July, so in half a year. And if we want to calculate, if you did that with one mini, so obviously one mini is $20 a point times 20, you would have made $48,100 on one mini contract. That's insane. That's absolutely mental. Now, of course, there would be overnight holding, so you would have had fees and whatnot. But even if we, you know, take a third away, it's not going to be a third, but even if you just say 40 grand, that's quite insane. Following the freaking moon. What the hell is going on? And the win rate would be a loss, 2 losses, 1 win, 2 wins, 3 losses, 3 wins, 4 losses, 4 wins, 5 wins, 6 wins, 6 wins, 4 losses. So actually a positive win rate as well. I don't know. And this is just a random. Now look, I'm not saying follow the moon phases. Okay, this was the most random test, but it just kind of goes to show, if you have like a really robust strategy, even if you have just simple rules and you stick to them robotic, you have an edge in the market. And the edge isn't the moon phases. I don't think it is. You'd have to do a lot more testing than just half a year, right? You'd have to back test a hell of a lot more. Okay, but this is how you build strategies, right? When it comes to trading, and it shows that the edge here was literally the risk management, right? It's the risk management, it's the edge, and the discipline, and it just kind of goes to show, you would have had a very good half year. Let's just put it that way. You would be up 48,000. You'd be very happy on one mini contract. If you wanted to do it on a micro, you just divide that by 10. So on a micro, you'd be up $4,800. So you look, it can be very profitable if you have good risk management. Now, obviously, it's a bit of a joke video, but I don't know. I found that quite interesting. If you would like me to go over some other funny indicators, let me know which indicators. If you found any indicators on TradingView that are a bit different, and you'd like me to kind of build a strategy and test it and kind of, you know, play around with it, go ahead, leave a comment down below. If you want to see more videos like this, leave a thumbs up, subscribe, turn on channel notifications. I break down so many different things on this channel, but mostly order flow related, footprint charts, things like that, to teach people how to actually trade. So well worth subscribing if you haven't already. But apart from that, guys, thank you for watching, and I'll see you again very soon. Take care.